Good afternoon and welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. These are your headlines for March 20th, 2012. The GOP is out with a new budget for the U.S. Can you see what's missing from this picture? There is something really glaring missing from those assumptions. It affects the entire world, you could argue. We'll let you know if you can't figure it out. We'll break through the PR and more of the wool the establishment is trying to pull over your eyes, from MF Global to the Jobs Act to the mortgage settlement. And Ben Bernanke started his college lecture series today. What is he trying to achieve exactly?
We're going to talk to you about the most urgent thing that is on our mind, and what we suspect is the most urgent thing on the minds of those who will connect with us.
In that vein, is he indoctrinating America's college students, trying to initiate them into the cult of support for the Fed, attempting to set the narrative and write history? We'll discuss. And we have evidence that perhaps Goldman Sachs bankers and Muppets aren't so different after all.
We specialized in causing pain, spreading fear and doubt.
Today, the Muppets, as in the ones you just saw, received a star on the Hollywood Walk of Fame. Much better treatment, you could say, than the real-life ones at Goldman Sachs, according to Greg Smith's op-ed, and more Goldman alum who have come forward about the firm's Muppet customers. We'll give you the roundup of them as a new round of staff cuts at Goldman are God's latest work. Let's get to today's Capital Account. As you heard me say, Federal Reserve Chairman Ben Bernanke began his college lecture series today. He spoke to undergraduate students at George Washington University right here in D.C., becoming the first Fed chairman ever to help teach a college course. Now, 80 students applied, wrote essays, really wanted to be a part of this, to become indoctrinated in why the Federal Reserve is important, I would argue. Let's highlight a few of his PowerPoint lessons since we listened and watched his lecture attentively. So here's where he's talking about the Fed being the lender of last resort. He says the qualities there are that they lend freely against good assets at a penalty rate to discourage excessive use. Okay, so that's what he told those students. That's funny, though, because we thought the Federal Reserve has done anything but lend against good collateral in recent years. You know, traditionally, the Fed has accepted only the highest quality collateral in return for a loan. The prime example are U.S. Treasuries. During the 2008 crisis, however, the Fed, post-crisis, was willing to accept seemingly any dubious piece of highly overvalued paper that was deemed illiquid or toxic, are popular words by the rest of the banking system. CDOs full of things like commercial and residential real estate loans, credit card loans, auto loans, student loans, and the Fed has offered trillions of dollars in low interest rate emergency loans, not that penalty rate, low interest rate loans that were not disclosed by the central bank until last year to keep banks like Bank of America, as an example, afloat. And here he is talking about what's wrong with the gold standard. One of the things he says at the bottom is that the effects of bad policies in one country can be transmitted to other countries if both are on the gold standard. Okay, that's weird, because we thought if you're on a gold standard, essentially you can demand that other countries can demand gold in return for dollars if you start to print them. But with fiat currency, if one country is devaluing, this causes another country to do the same. We've seen that with Brazil and China in response to the U.S., what's known as currency wars. We talk a lot about them. We've interviewed the best-selling author of that book who's talked a lot about them. So this is exactly the opposite of what Bernanke is saying. Let's break through the propaganda, though, that's coming from all directions. It's not just Bernanke. We have MF Global. We have the mortgage settlement. We have the GOP budget released by Paul Ryan. Here is to talk about all of this is Gerald Celente. He's founder of the Trends Research Institute, publisher of the Trends Journal, and I am so happy to welcome him back to Capital Account. Hi, Mr. Celente.
Well, thank you for having me.
Anytime, absolutely. You're always such a pleasure and so insightful. So first I want to ask you, because I sat through Ben Bernanke, Professor Bernanke's lecture today, and heard some assumptions that he made that I would disagree with, talking about the importance of the central bank as a government agency and the necessity of having a government agency with the public's best interest in mind. What would you, Gerald Celente, tell those students about the Fed and its mandate?
Well, I think the whole charade, this dog and pony show that he's putting on, talking to college students, really says it all. And it's all connected. And people should understand that all this is high school and college. For example, the same politicians that are telling you what to do today are the same people that you knew in high school and college that wanted to be class president and head of the student council. Well, they follow their career path. And here, Bernanke, this guy's really in that same frame of mind. You know, I am the professor, the Princeton professor, and you listen to me and do your assignment now, and you'll get a good grade. Just pay attention and repeat exactly after me. So that's all this is, Lauren. It's a charade. It's a show. It's high school USA.
Yeah, and it was live streamed all over the USA for anyone who was listening to that lesson too, and maybe Bernanke is hoping to have them repeat after him after all of the flack he's gotten. Some call this a PR offensive. Speaking of professors, Gerald, we saw two of President Obama's nominations for Federal Reserve Board of Governors. They testified before the Senate Banking Committee today, and you know, even though some of them talked about a little bit of difference in policy, perhaps maybe raising interest rates before that 2014 date that the Fed has given, if things improve a lot of the stuff I heard, Gerald, wasn't too encouraging. Jeremy Stein, who's a Harvard economic professor, speaking of professors, said this: the Fed has shown a laudable ability to adapt and evolve in terms of the tools it has used to conduct its monetary and lender of last resort policies. Yeah, Gerald, no kidding, it really has adapted despite no change in its mandate. When you hear these guys, is this just more of the same?
Yeah, and that was a long statement to say we're going to print a lot of digital money as fast as we can and flood it into the system with near zero interest rates. And again, it's one big Ponzi scheme. Look what's going over there in Europe with the European Central Bank. And you want to talk about great collateral, Lauren, what are they doing? You know, 1-point-something trillion euros that banks could borrow at 1% interest rates, just throwing junk on them. They have no collateral. They have no money. And what are they doing? Well, you know, pay it back to us in 3 years. Just keep this Ponzi scheme going. So and this is very important parallel that's going on. Follow back to the crash of 2000 when the NASDAQ crashed and the dot-com bubble burst. What did they do after 9/11? They lowered interest rates to 46-year lows to keep the Ponzi scheme going. Because the cats don't like to lose money and they have to make it back real quick. Well, now they're doing it again. But this time, people don't have the leverage to buy homes. So what are they doing? Well, they're going back deep into credit card debt. Oh, now they're buying automobiles and a lot of crap that they don't need at retail stores. So it's really the same thing. All they're doing is printing digital money, not worth the paper it's not printed on, as fast as they can and dumping it into the system.
And when you're talking about consumers spending it on things they don't need, maybe, Gerald, that's because they are afraid to take any risk with their savings. Look at a research firm conducted this study and found that not only are 2/3 of working-age adults believing that the U.S. economic model no longer works for the majority of Americans. But what is more striking to me is that now 51% of Americans they polled are not willing to take risk with savings. That's up, Gerald, from June of 2009, where it was 40%. So is this a direct byproduct of, you know, a vicious cycle where people are afraid to take any risk because of maybe what they've seen in the financial system, but yet they can't make any money because they're basically repressed by these 0% interest rates, so they're buying flat screen TVs at Best Buy or whatever?
Well, part of it, but, you know, yes, that is definitely a part of it. And let's look what's happening to the older people, the retirees. They're not getting any return on their money because of these viciously low interest rates that are put in place to, I call, public enemy number one, Osama bin Bernanke. You know, he's hurting a lot of people with this low interest rate scheme. And then why wouldn't people invest in the stock market or commodities markets? Gee, I don't understand why. You know, MF Global, Lehman Brothers, the Goldman Sachs gang, the Merrill Lynch mob, why would anybody be afraid to give their money to them? Oh, these are, you know, I just heard Mayor Bloomberg, you know, the billionaire Bloomberg, and billionaires have direct lines to God, because he said that even God would have trouble straightening out what's going on at Goldman Sachs gang. Yeah, God can't straighten out hell. Let's make this really clear. And just for the record, you know that money changer line about Christ beating the money changers out of the temple, the only time he becomes violent? Guess what? The money changers are in control.
Yeah. Gerald, just to set the record straight, on Mayor Bloomberg's comments that even God couldn't run Goldman right now without a lot of flack, do you think that this is because, as he said, it's his job to support companies that are responsible for New York's tax base? Or do you think he, as you said, as a billionaire, a former investment banker, really believes that Goldman is doing God's work?
Well, you know, I don't know what he believes, but it's a lot of crap. And, you know, getting God into this thing. It's like these stupid politicians like Bachmann and Kaine and Perry and the rest of them. You know, I got a telephone call from God, and God said I should run for office. I'm sick of these people telling me what God told them and what God believes. I mean, this is kiddie crap, along with listening to Ben Bernanke lecture a bunch of college students. How dumber could this become? How much more shallow does it have to be before everybody sees what a bad show this is?
And everybody starts to call him Osama bin Bernanke, the jihadi banker. Real quickly, Gerald, I want to get more into MF Global after the break, because I don't think we're going to have time to right now. But a new ruling in the Lehman Brothers bankruptcy has KPMG, who is in charge of administrating MF Global's, it's MF Global's European administrator. They are saying that the precedent that is set, which says that customers with non-segregated accounts and segregated accounts basically are equal, that you have no priority if your money was in a segregated account to get your money back before that non-segregated account holder. You are a segregated account holder, right? How do you feel that they're saying this is the precedent?
And that's what the courts are ruling over there. Those wallies in robes and wigs. They're making this stuff up. They're all members of the club. And what they're doing is they're giving their friends the money. And the big guys got most of the money, and they're in on the deal, the J.P. Morgan Chase and the rest of them. Anybody looking at this, you had that wonderful interview on with Mark Millin, is it?
Yeah, Mark Millin.
Merlin, yeah. And he really laid it out clearly that this shouldn't be a Chapter 11 bankruptcy. And on and on. The whole thing, why isn't John Corzine being brought up on fraud charges when Gensler, Gary Gensler, the former underling of John Corzine when they were both at the Goldman Sachs gang, why isn't he, now he's the head of the Commodities Future Trading Commission, he said it was fraud in basic language when you go into segregated accounts. Why isn't Corzine being brought up on fraud charges? Why is it that every little person out there, like us working people, really get hit by the letter of the law, but the people on the top get a free ride? That's the question.
That is the question, and we'll continue to try to answer it on this show, and we'll continue to try to answer it with you after the break. But we have to go to break quickly. We'll be back with more with Gerald Celente, founder of Trends Research Institute, publisher of the Trends Journal, and also, still ahead, Greg Smith's New York Times op-ed claims some Goldman Sachs employees refer to their clients as Muppets. Everyone knows it by now, but it may be those employees that have more in common with the Muppets after all. We'll give you our 3 cents on why their 15-minute walk of fame is not over. But first, your closing market numbers.